This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Monday morning, starting a fresh new week. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, good morning, Prashant. Morning, Nigel. There was so much sporting action over the weekend, right? After all of that, I mean, of course, the India victory against Pakistan, but also the way Afghanistan played yesterday against England, right? It was breathtaking to see their win. So I guess all eyes will be on what happens next.
But our boys played fantastically well. You know, a bit of a damn squib actually for those who went to the stadium, because you want to go and see 100 overs or at least 95 overs. When you get to see 70 overs, I think you feel it's a bit of a raw deal. But full marks to our boys. Came up with a top performance, and now we feel that we have the momentum with us. England, I think, we're used to it, right? 2011 Ireland, 2015 Bangladesh, and 2023 Afghanistan. So they never fail to disappoint.
I think people sitting at home also got, a little disappointed with the way the India-Pakistan match got over so early, right?
The pizzas and,
by the time the food came, the match was over.
The pubs would be disappointed, right? I mean, all cover charges and bookings and everything, and then you have this short match. By the way, guys, it's also, I think, the beginning of the Navratri period. Yes. So wishing all our viewers a very happy, auspicious, prosperous sort of beginning of the festive season. And this is the period which marks that. So wishing all of you the very best from all of us here. Well, let's just begin the program then with a quick look at what you need to know as we begin today's trading session. And I'll just start with the big things we saw on Friday, and we actually did see quite a few big things. What am I talking about? Oil prices, gold prices, and the fear gauge, so as to speak, which is the CBOE Wix, all saw very large move. I mean, these moves that you're seeing on your screen will fall within the top 2-3 percentile of what we've seen in 2023 so far. So oil went up 6%, 90 plus on that one. Gold prices went up some almost 4%, above 1900. And the Wix, the fear gauge, went back above 19 odd levels. So it kind of shows you the market kind of thinking, the market set up on Friday, especially, I mean, actually the start was good, but then once the sell-off happened, things never really recovered. Now, U.S. equities were weak as well on your screen. So NASDAQ was the weaker of the two, down about 1.2%. The S&P was down about 0.5%. And yields have been all over the place. So I could tell you what happened on Friday, but I think it's better to take a slightly zoomed out snapshot. The 10-year in the U.S. has lost 18 basis points Friday to Friday. Right? It's down, it's not up, it's down. But what is the reason why yields are actually selling off? And this is, of course, a theme we've highlighted for some time, but the reasons are always different. So there was exceptionally dovish Fed speak. Again, something which we highlighted middle of last week in terms of how many Fed members, and these are people who actually have a vote on the FOMC, the rate setting committee, saying that because market rates are going up, that is doing the job of what we are supposed to do. So we actually may not need to do too many rate hikes, because interest rates are already, market interest rates, that is yields, are already high. So that's offsetting the need for hike from the Fed. And I think that is essentially the one big reason. By the way, there are big economists who were expecting a hike in November. I mean, there were a few that, they've pushed that out, saying that, well, because of this, it's very unlikely that the Fed will make a move in November. The other factor why yields sold off is also because of geopolitics, right? I mean, the war in the Middle East is still very much on, the conflict rather, and yields sell off. I mean, we've showed this during past instances of conflict in the Middle East as well. On an average, yields in the US sell off 20 to 25 basis points. So it kind of sort of, ties in there as well. Over the weekend, now that we're talking about geopolitics, you had U.S. officials. There were reports that U.S. officials are actually in conversation with the countries there in the Middle East, and they're also perhaps back-channeling with Iran to try and contain the conflict. I think at the very margin, this may be a little positive, right? I mean, the fear is Israel has kind of put it out there that this is going to be a long, drawn-out conflict. But the bigger fear is that this kind of becomes a proxy war and other players in that region get involved, and this becomes much larger. So I think these efforts over the weekend, as we sort of learn, I think at the margin perhaps will be seen as slightly positive. Let's just sort of tie all of this back in terms of where we are at in terms of the market. So on Friday, the Nifty ended above the 20-day moving average, which is at about 19,724. The first resistance for the Nifty comes in at about 19,843. That's the recent high. And then you have to take out the 19,883. I mean, around that level, that's also the 61.8% retracement. So 19,800, 850 is essentially what the market needs to take out for, some confidence, etc., to come back. And the support of the rising trend line for the Nifty, which stands at about 19,650, about 100 points away from where we left off on Friday. Unlike the Nifty, the Bank Nifty failed to see any substantial recovery on Friday. I mean, actually, it was a much weaker index. So resistance there coming in at 44,757 and then 45,54. So a couple of percentage points away from where we are right now. So that's 44,757. That's the first one. And support there comes in at about 43,900 levels. Again, not very far away. These are very near-term numbers that we're talking about, so as to speak. So, I mean, I think it's a pretty confusing kind of situation. You could kind of say that, well, buying the dips has been the right strategy and it has worked, and absolutely that would be the case. But the thing to try and do is to buy the bigger dips, not very shallow dips, but if you get larger, steeper kind of dips, that sets you up, especially in a trading kind of environment, with better risk reward going forward. Otherwise, I mean, I think the situation still remains pretty much in a flux with what's happening in the US and, of course, what's happening in the Middle East as well. Sonia.
Absolutely. I think the bias is definitely on the downside. I mean, what you saw last week, and even, if you just break up what's been happening in trade, the problem is with the heavyweights, although the mid and the small cap end of trade is absolutely fine. I think today, as we begin trade, the GIFT Nifty is suggesting a fall, right? Almost a 15-20 point fall. That's largely because of what's happening with crude. As we mentioned, there was a big rally in crude. Brent is now above $90 a barrel. And there's also talks of, the regional energy production being affected because of perhaps further escalation of the situation with respect to Israel and Hamas. Safe haven assets like gold have also rallied. So there is a risk aversion towards equities as all of this plays out, and nobody knows how large the situation could turn out to be. Hence, there is this move towards safe haven assets like gold, and you've seen a spike in crude. All of this is reflective on the index as well. If you just map the last 1 month, the Nifty is down almost about 400 odd points, and now just at that 19,750 mark, slipped below 19,800 as well. The flows have thinned out too. So FIIs barely bought about 370 crores on Friday, while there was selling by DIIs. Now, a couple of big things to watch today, which could maybe, help with sentiment. One of them is HDFC Bank's numbers that come out, and this will be the first quarterly earnings post the merger. So the numbers could perhaps be volatile. A couple of things to understand would be the opening cost of funds, which will be closely tracked for HDFC Bank post the merger. So that's a stock in focus. Remember, the stock is down almost 8% in the past 6 months. It's been a bit of an underperformer. So let's see which way this goes. There are other big earnings this week. There's Bajaj Finance, Bajaj Auto, Wipro, HUL, Paytm. All of these companies come out with their earnings. So we'll keep tracking those very closely. And because of the surge that we've seen in crude, this disproportionate surge, you could see a negative trend on paint companies, tire companies, aviation stocks, etc. So all of these companies will be in focus. And then names like Avenue Supermarts as well have given unimpressive numbers this time. But, the problem really lies with the large caps. And now, because of what's happening across the globe, it's a bit of a drag. It's also an earnings-heavy week in the US. So lots of things to negotiate this week.
Well, that's right. So actually, the global cues are a little bit worrying. You look at the market, so you look at the cues that you're getting as well. Otherwise, it's quite worrying out there. And for us, the Nifty Bank actually has been the weak link. And there have been some short positions that have got added on as well out there. But what could change things is HDFC Bank. Last week, in the last 3-4 days odd, we've seen periodically there has been some buying. But even in Friday's trading session, if you bought that dip, well, that got sold into as well. So those are the big three factors that I'm looking at. And there is some caution on board. Why do I say that? Because CBOE volatility index, well, that spiked up close to around 15%. You had gold prices as well that were up close to around 3.5%. And Brent crude prices spiked up close to around 5%. The combination of these three, with all these three spiking up, we haven't seen that actually in the last many, many years. And I believe so, we haven't seen this sort of a combination in more than last 10 years or so. So that's a bit of a worry, particularly when gold spikes up. that's telling you that the street is a little bit cautious, or the investors are cautious on equities across the globe. What happened back home then? You had the Nifty that ended lower. There was some unwinding of positions on the Nifty open interest side. The Nifty Bank, well, you had a spike up in terms of open interest out there, was up more than 10% odd. And what did the FIs do? Well, they added some shorts, and they added more than 11,000 short positions, and it appears most of that shorting was done on the Nifty Bank itself. On the options side, they bought more puts than calls, and they wrote more calls than puts. So that's a little bit of a bearish skew that's coming in there. But two strikes were very, very active. 19,700 call, 19,700 put. Between them, both of them, each of those strikes added more than 25 lakh shares. And the premium, the combined premium of both those two is close to around 200 rupees. There appears as a short straddle playing out at around 19,700. What is that? You write both those two strikes at around 19,700. You pocket that premium of close to around 200 rupees, and you're playing for this broad range. 200 minus 19,700, 200 plus 19,700. And that's the broad range you're looking at. On the Nifty itself, what are the near-term cues? Well, the 20 DMA, that's the mark that will get tested. The 50 DMA, that's the line in the sand. You don't want it to break that level. Otherwise, maybe we could correct to around 19,350. And on the upside, the recent high that we saw last week, 19,850 or thereabouts, that's the crucial factor. For the second half of trade, HDFC Bank, the rank underperformer year to date. You pull up a graph, that'll tell you the picture. HDFC Bank has underperformed the Nifty big time year to date. That's an underperformance of close to around 15% odd. Can they deliver a bit of a positive surprise? Can the commentary be good? Well, that could turn things on its head for the second half of trade. So that's going to be important. For starters, though, we pull back a little bit.
All right. Well, as we speak, the Asian markets are also under pressure. So the Nikkei market, the last time I checked, was down almost about 2%. A lot of pressure coming in over there. So let's begin the day with some views on the equities front. You have Vikas Jain of CLSA who says, after 6 months of inflows, India saw outflows of $1.8 billion from FIIs in September, driven by non-India dedicated funds, while India dedicated funds continue to record inflows. He says FIIs cut their relative weight in financials, energy and materials, and they shifted into IT, utilities, communication and real estate. He says this FI selling was more than overshadowed by inflow into domestic mutual funds of $2.9 billion, still down month on month. Vikash adds the systemic investment plans saw record inflows of 160 billion rupees. He says domestic investors continue to redeem large cap funds and move into mid and small caps. He says due to its attractive risk-reward profile and defensiveness, they add ICICI Prudential Life to their India-focused portfolio and notably raise their insurance overweight sector view.
Okay, well, let's get you some money market views as well. This is B. Prasanna of ICICI Bank, who says the dollar remains strong owing to safe haven buying on account of geopolitical crisis in West Asia and higher than expected inflation print in the US. He says along with a strong dollar, firming crude prices and FPI outflows in equity markets are keeping rupee under pressure, which is protected from further depreciation by RBI's forex intervention. He expects to continue, he says that the rupee may trade in a narrow range between 83.05 to 83.55 to the dollar in this week.
And on the bonds, B. Prasanna says global yields continued consolidating despite higher than expected inflation prints, largely owing to risk-off sentiment emanating out of the ongoing crisis in West Asia. He says local yields recovered marginally from recent highs on the back of strong investor demand. He adds the uptick in crude prices and announcement of the open market operation sales by RBI remains the key risk to watch out for. He also expects the 10-year benchmark bond yield to trade in a range of 7.25 to 7.40%.
Well, we've got a lot of stock-specific action to track for you. We get to that in just a bit from now in our special Top 10 segment. But let's run you through the list for now. We're looking at Tata Motors, Dalmia Bharat, Suntech Realty, Laurus Labs, PVR Rhinox, Bajaj Electricals, Texmaco Rail and ONGC. All of them on positive news flow. While we have Avenue Supermarts and Delta Corp that could be reacting to negative news flow.
Okay, well, Mark Matthews is now joining us. He's with Bank Julius Baer and Company. Mark, good to have you with us here as always. Thanks very much. You know, this move in the wicks on Friday and oil jumping and gold prices jumping, all are basically kind of risk-off signals. The Nasdaq was down just a little over 1%. What's your best sense of things from here? Are equity markets taking a bit of a dive here or unlikely?
Unlikely. I don't think that the reason for the risk-off sentiment is because of the stronger September payrolls number that came out the week before last or the stronger CPI that came out last week. I think it is because of Israel. And when one speaks about these things, one sounds very callous when relating them to markets. But if I could just say that if we look back at the terrorist attacks in Bombay, November 2008, over the next 12 months, the Nifty was up 80%. Over the next 5 years, it was up 150%. Over the next 10 years, it was up 350%. So I think the reason the market's gone down is this concern about what's going to happen now. These terrible terrorist attacks have taken place, and Israel is on the verge of responding. But history shows us that these geopolitical events do not tend to be disruptive for the market.
All right, Mark, hi, good morning. We don't even want to go there, right? What happened in India with respect to the crisis? Of course, post-crisis, always the returns have been disproportionately higher. And it's in hindsight, it has always been the best thing to buy into these dips. But what do you do now, considering that the market has moved on? I mean, there is a lot of buying that we've seen in markets like India. Do you think that is something that can continue? And for the rest of the calendar year, what would your approach be for India?
I think it's going up. I think that generally markets around the world will go up. And we all know that the benchmark is the S&P 500 index. And we all know that ultimately what moves share prices is the earnings of the companies that those share prices represent. The third quarter earnings kicked off last week. So far, only 32 of the 500 S&P constituents have reported. But what those 32 companies have done is beat consensus estimates by 10%. And 85% of the 32 beat the consensus estimates. And so, of course, it's a small number to extrapolate for the full 500. But my sense, we will get a better than expected beat simply because the economic data during the third quarter was so very, very strong. You may know the Atlanta Federal Reserve is indicating over 5% GDP growth in the third quarter. And if you exclude energy, by the way, the S&P earnings will be up about 5% year on year. That'll be the first positive reading in 3 quarters. So I think the earnings are what's going to be most helpful. And I think we will have a good rally in the fourth quarter of this year. By the way, I think China can also rally quite strongly because of the stimulus that they've been putting in place. They're setting up a national team to buy stocks in the mainland Chinese market. Xi Jinping and Joe Biden are meeting in San Francisco at the APEC summit next month. So I think there are many reasons why we shouldn't get bearish and why, in fact, markets will move higher over the next few months.
Hi, Mark. Good morning. So last time around as well, you had mentioned that you're expecting quarter 4 to be good for global equities on the whole. My question to you is, what about India? India has outperformed. Will India continue to outperform? Because now the flows have been tapering out a little bit. There are concerns because we're getting into a big election year as well. So how do you expect the Indian markets to perform?
Well, I'll just say from the get-go that it's our favorite market in Asia, and that means, of course, that I like India. We have invested our clients' money and on behalf of our clients on a discretionary basis in India. But on a quarterly basis, of course, there will be times it doesn't outperform. My guess is that this coming fourth quarter, the fourth quarter we're in now, could be one of those, simply because China has done so badly so far this year. But I mentioned earlier, there are 3 reasons why you could get a good rally in China, which, by the way, is what happened in the fourth quarter last year, too. China was up about 15% in the fourth quarter alone last year. And so that Biden-Xi Jinping meeting, the government buying company share prices to support the market, and incrementally more stimulus. They announced a trillion renminbi, of infrastructure spend last week. I think that, and then you look at India where, it has done well, as you point out, and we are getting some frothy prices in the mid and small caps. It might not outperform in the fourth quarter. I don't know, but I still like the Indian market.
All right. That's a great way to end, isn't it? You still like the Indian market. Mark, always a pleasure speaking to you. Thanks for your quick thoughts on how to approach India as well as the rest of the globe, given the kind of geopolitical tensions that we're dealing with. Let's slip into a quick break. It's the start of a brand new week, and our entire research team will be with us to help us with the top 10 stocks that you need to watch out for. Stay tuned. Welcome back to the show. Plenty of stocks to talk about, so let's get straight to it. Mangalam is joining in first up to tell us how Avenue Supermart's numbers look. Mangalam, over to you.
Well, for Avenue Supermarts, the same thing continues, where the revenue grows well, but it's the margin which is under pressure, and that's largely because of the product mix. So the gross margin pressure continues this time around as well. They were lower both year-on-year as well as quarter-on-quarter. Revenues up 18.7%. No surprises there. The company had given their second quarter update. EBITDA grew just 12.7%. That makes the EBIT margins, or rather EBITDA margins, at 8%, which is the lowest that we've seen in the last many quarters. And overall, the net profit reduced on account of a low tax expense in the base. So there was a 140 crore tax credit. Gross margins of the company have reduced largely because of lower contribution coming in from their high-margin general merchandise and apparel business. And this is something that the street will continue to worry about, as a result of which we will see the stock, which has been an underperformer, continue to drag lower.
Okay, all right. Thanks a lot for that, Mangalam. So the stock expected to drag a little bit lower. But Sonia, some good news coming for Tata Motors. They're unlocking value.
Absolutely. And I think this was expected, before the Tata Technologies IPO, which is expected very soon. So the news flow is this: Tata Motors will be selling 9.9% stake that they have in Tata Technologies, which is their wholly owned subsidiary. They will be selling to TPG Rice Climate for a little over 1,600 crores. And this ascribes an equity valuation of 16,300 crores for Tata Technologies. Now, Tata Motors in the press release has said that this transaction furthers Tata Motors' deleveraging agenda, and the transaction will close in the next 2 weeks itself. Earlier, TPG Rice Climate had invested $1 billion in Tata's passenger electric mobility business. So basically in the electric mobility business. And Tata Motors currently has a little over 74% stake in Tata Technologies. So they will be divesting a little bit and selling to TPG Rice. Of course, this is positive for shareholders. So I'm going with green on that. And this also is, the first step before the Tata Technologies IPO. So this stock is definitely going to be in focus today.
Okay, all right. I'm watching Dalmia Bharat. They came out with a set of numbers. I just want to pull up the intraday chart of Dalmia Bharat on Friday. Stock ended at the low point of the day. The buzz was that the numbers will be disappointing, but actually the numbers are a little bit better than what we were working with. So the revenues, well, that came in a little bit lower. we know that the volume growth is, far lower than comparison to some of its peers. And pricing is an issue because they have exposure to East as well as South India. So that explains why in the top line there was a bit of a miss. But the EBITDA number looked better. That's what led the margins to come in even better. And the profit number as well did come in better. On the specifics, the 6.2 million tons of volumes, that's in line with what the street was working with. The upper end of the range was 6.4. The lower end was around 6 million tons. So 6.2 is in line. But the EBITDA per ton came in much better. What caused that? The beat is primarily because of lower cost, particularly power and fuel costs. So if you pull up a chart, it'll tell you the overall cost per ton did come in low, and the power and fuel costs per ton as well did come in much lower. So expecting the stock to open up in the green, and the shorts in the system as well could have an issue this morning. But that's about Dalmia Bharat. Let's focus on Sunteck Realty. They came up with an operational update, and Sonal, it looked quite good.
It did, especially on the sales front, because they did see a growth of 17% on a YY basis, and it has come in after some dull quarters for the company. Collections, however, did see a decline on a YY basis, that is for Q2. So pre-sales came in at 395 crore rupees, collections came in at 214 crore rupees versus 331 crore rupees. So it's a 100 crore downtick on a YY basis. But the company says in Q2 they looked at, or they launched 7 large projects in the MMR region with a gross development value of 30,000 crore rupees, which if converted into value could be a big sales number for the company. Going forward, they are also planning to launch 2 new large projects, so the commentary positive as well. Expect the stock to be in the green today.
Okay, thanks a lot for that. Ekta is also joining in to tell us why Laurus Labs should be on your list this morning. Ekta, over to you.
Thanks for that. Well, its associate company ImmunoAct has got India's first CAR T cell therapy approval from the Indian drug regulator. CAR T cell therapy is basically a type of cancer therapy which is used when other things don't work, and it is expected to be extremely effective. So ImmunoAct is an IIT Bombay incubated company. Laurus Labs has invested over $18 million in ImmunoAct. So I expect Laurus Labs to probably be in the green because this particular therapy will be one of the first of its kind in India. It's made in India and it's expected to be much cheaper. We haven't really heard from the management in terms of how much cheaper, but it could be over 50 to 60% cheaper than the alternatives when it comes to CAR T therapy available in the country.
All right. Thanks very much, Ekta, for that. Well, let's focus on 2 more names. PVR is going to be in focus, and Bajaj Electricals is the other one. Surabhi's got details on both. Surabhi, hi, morning.
Good morning. So PVR Inox will be in focus. That is because it will be the only multiplex operator that will be screening the live matches of the Cricket World Cup. They will be screening it at select theatres over 40 cities. Additionally, they have launched a monthly subscription pass at 699 rupees per month, where customers can watch up to 10 movies per month. This is applicable only on weekdays and excludes all the premium offerings, but still 700 rupees for 10 movies a month. This is because they'll be engaging with the customer base to know more about their watching habits and movie preferences. Apart from that, Bajaj Electricals, they have won a service contract order worth 564 crores from Power Grid Corporation. This contract is for a transmission line in Andhra Pradesh, and the project is going to be completed in the next 21 months.
Okay, all right, Surabhi, thanks a lot for that. And hopping across back to Mangala. Mangala, what an action-packed week you've had, right? Going to see the game, coming back, analyzing results. I think last night you were at, another, a gig or something. But for the time being, tell us about Texmaco as well as Delta Corp.
Well, action-packed week indeed, but that's what you're going to do, right? Short weekends is what you get. But these numbers, Texmaco, strong run of results for all these rail companies continues. The stock price is telling you that, there's something which is likely in the numbers itself. And they've also announced the demerger of their rail and green energy infra business, so for which they will offer 3 shares of this business for each share that the company holds or shareholders hold in this company itself. For the revenue, 66% jump, EBITDA jump at 75%, and the net profit jumps from 11-12 crores or to about 20 crores. That's a 70% jump out there as well. There's been growth across their key segments. Heavy engineering, where the margins have jumped from 2% to 6%. Foundry, steel foundry business, where the margins have jumped from 5.5% to 8%. And a big jump is what we've seen in the other verticals as well. Rail and green energy, however, has seen a decline in their revenue as well as margin. So that's something will be important to watch out for, given this business is getting demerged. The other one is Delta Corp. We talk about action-packed weekends. Well, there is a fair amount of regulatory action which is taking place on Delta Corp over the last month or so. Once there was a GST notice of 17,000 crores, and now there's another one. This one comes in from the West Bengal government, where they've gotten notice is worth nearly 6,400 odd crores between the same period from 2017 to 2022. Let's see how this comes about, but this continues to be an overhang on Delta Corp.
All right, we will be connecting with the management of Texmaco Rail and Engineering at 9:40 a.m. today, so you want to stay tuned for that. But the big highlight overnight, actually in the last 48 hours, has been the big spike up in crude. Brent crude prices are up 6%. Manisha is here to give us the latest on that. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yeah, 6% of gains in prices on Friday and 7.5% in the previous week. So we are trading above $90 a barrel. A bit of a profit taking has come in as U.S. has asked to de-escalate the Israel-Gaza conflict. But we do know that it's far from over, and investors are pricing in a possibility of a wider Middle East conflict. There also are warning statements from Iran that the war could expand if Gaza blockade persists. So that's exactly what the markets are looking at right now. On top of that, you also have sanctions on tanker companies now, which are carrying Russian oil above the G7 price cap. So this is keeping crude oil prices quite volatile. But what also has gained along is the gasoline prices, the distillate prices, natural gas prices. All of these also are trading at a multi-week and a multi-month highs, with the crude prices rising and the Europe gas continuously on a weaker trend. We have seen those prices also gain up by 50% in the previous week.
Okay, all right. Thanks a lot for that, Manisha. Well, let's do a quick recap then of all the stocks we just covered for you. Stocks with positive news flow. They include Tata Motors, Dalmia Bharat, Suntech Realty, Laurus Labs, PVR Inox, Bajaj Electricals, Texmaco Rail, and ONGC. Well, stocks with negative news flow, well, they include Avenue Supermarts and Delta Corp as well.
Okay, well, we'll take a quick commercial break here. Up next, we'll be joined by Prakash Devan, and we'll talk stocks, we'll talk sectors, and what's top of mind for him as we start this week. A little later, Peter Maguire at Exim Australia will join in. We'll talk about oil prices, which surged to above $90 a barrel. Stay tuned.
Welcome back. Hope you're having a good morning. Well, global cues are a little bit subdued, and that's why the Gift Nifty is suggesting we pull back closer to around 25 to around, now 16 points or thereabouts. I think the gash could be a little bit deeper to kickstart trade. But plenty of stocks to discuss. Prakash Sivan joins us for exactly that. Hi, Prakash. Good morning. Hope you had a good weekend, Prakash. Well, let's start off with the top stock, Avenue Supermarts. Those numbers look a little bit disappointing. Because of their product mix, the gross margins, that's not able to perk up. Valuations are not cheap as well. How do you approach the stock from here on?
Good morning, Nigel. So I think the Avenue Supermart numbers very clearly tell you where dynamics are changing within the retail segment. If you look at some of the sub-segments where they've actually not been able to get pricing power, it's thanks to the competitive intensity that's coming in from the likes of Zudio and now possibly one of the new initiatives from Reliance Retail as well. So that's the space that's hurting quite a bit. Whereas actually in an inflationary environment, if there was anything that would have got impacted, it should have been the top line, which doesn't seem to have happened. So volume growth, revenue growth, both seem to have come in place, but it's actually margins. So their ability to be able to price themselves superiorly as compared to the other offerings or other offers is probably waning a bit. So I think the market will probably start wanting to relook at the kind of premium valuation that has always been accorded. I always believed it's a great franchise, great business, but the low floating stock has kept prices up, the kind of holding pattern that you have, nobody wants to get out till there is some sort of a structural secular trend that's kind of evident. And it's too early to say that, but this probably could be the beginning of a little bit of a softness in the margin profile. And if the revenue also starts kind of lagging, you'll probably see a much more faster, disappointment of sorts getting baked into the prices. So what do you do at this point? I would book profits if I were, holding on for so long, because it probably is too range bound to give you any kind of a delta from here on.
All right. We also have plenty of numbers that are expected right through the course of this week, Prakash. Let's get down to that. Today, the big one will be HDFC Bank, of course, and it's the first one post the merger. The stock has been a huge underperformer. Do you think there could be any change in that trend?
Good morning, Sonia. So I think importantly, a month back, probably 5 weeks back, when the management addressed the market, analysts and kind of tried setting expectations right. Post that, everything's probably priced in. I mean, I don't think you'll find any deviation. In fact, all the worst, sentiment from the numbers would probably be in this quarter, because the transition is going to take its toll. There's a lot of things which would have to get ironed out in terms of the efficiencies coming back and things like that. So growth, efficiency, margins, all of that will probably reflect in this quarter's numbers, which will probably be tepid. But I think the market might not get more disappointed from these numbers. So I would believe, this is an endorsement of the fact that it will be probably a U-turn that will take in terms of where it is on metrics. And this could probably be the first quarter where that indication will get endorsed. But from here, you could probably start seeing improvement, even if it's incremental and very gradual, you will start seeing it. So it's kind of a bottoming out quarter that I would anticipate from the numbers of HDFC Bank.
Okay. Prakash, stay with us. Just coming back to you. I want to address some news flow as well. TCS has sacked 16 employees and disbarred 6 firms after concluding its investigations of the bribes for jobs scandal. Rima is here with more details on this one. Rima, hi.
Hi, if you remember way back in June, a couple of months back, there was this big, the news erupted about the bribes for jobs scam at TCS, which the company called as a resource management group, RMG as it was internally called. So now the company, adhered to their code of conduct. They conducted a strict investigation and finally that's been concluded. And the key takeaway is, as the statement reads, 19 employees were involved. Now the action taken by the company is 16 of them were sacked. 3 of them were removed from the resource management group, the vertical that they were operating with. Also, as a part of the investigation, they found 6 vendors that the company was working with for its employment, and those 6 vendors have been disbarred from further, any dealings with TCS. TCS goes on to say that this does not involve any fraud, by or against the company, nor is there any financial impact. The issue relates to the breach of the company's code of conduct by certain employees and vendors supplying contractors. And third, no key managerial person of the company has been found to be involved. So, the investigation is finally concluded and, the company has taken action. Back to you.
All right, Rima, thanks very much for that. So that's TCS in focus today. Well, I think, it'll be noted because it's an important development, but what matters, at least in the very near term, is the earnings trajectory, and we'll hear from more companies as we go along. Well, Peter Maguire is with us, CEO at Exim Australia. Peter, good to have you with us here. Always good speaking with you. This jump back above $90 on oil, is that knee-jerkish, or you think it's got legs and it can stay here, even run up from here? What's your sense?
Well, good morning, Prashant. I'll tell you what, it was booming as far as Friday. It really took everyone by surprise. A huge push up and 6%, and it's increased this morning naturally. So I think there's probably more legs. Don't get in the way of it because it's probably got a couple of more bucks until it finds a floor or a peak, and then it'll maybe settle, but it's going to be whipsawing and it's going to be volatile. So yes, I think overall it's going to probably, that uptrend is going to continue.
Okay.
All right. Hi, Peter. Good morning. The last time we chatted, we were getting to that India-Australia fixture. I think, we both knew the outcome, but we were happy to come out on top. Hopefully, though, we see you all later on in the tournament yet again. And maybe, Peter, that time you'll give us a better fight. But let's get back to crude oil prices then. Israel is very, very angry. And in fact, this is likely to drag on for a longer part. US, actually, they're in a bit of a flux because they're in catch-22 situation, which way they go. How do you see crude oil prices move? You've already said it could move higher, but do you see us move to the $100 plus barrel mark on?
Well, I think it's got the potential, Nigel. I feel as though it's, you've just seen such big volatility over the last couple of weeks. And if you look at this month, it just demonstrates, 95, 94, 95, then all of a sudden it gave off $12 and then boom. And it's just, that's the way of these markets. And when you've got geopolitical tensions and you've got the issues, especially, and the uncertainty as far as Israel and Palestine, what's going on there with the Gaza conflict, all of these, they're dynamic. And this is probably giving us some indication that could there be, if Iran's involved, could there be issues as far as supply? How do these disruptions impact the market? And they're all war premium, and this is the issue, I think.
Okay, so what do you do with Brent now? It's at $90 a barrel. What is the short-term view that you have over the next couple of months till the end of the calendar year? Where do you see Brent head?
Well, Sonia, I think it's got potential to be up higher. I don't know how much higher it can go. I mean, it's just been dynamic. So I think possibly 95, maybe 100 in this rally. And let's have a look and see. If it escalates and it becomes far more contagious as far as Iran's involvement or other countries come to Palestine's side, then this is all going to create, I think, more tension towards the oil market. And that's where we sit at the moment. There's a lot of moving parts, as I say, and the uncertainty is really what's driving prices. That was also demonstrated with gold the other night. So that was up $60. I know it's given back a little bit this morning, but that just demonstrates how volatile this situation is.
Peter, when we look at the sort of correlation between oil and, say, equities, right? It's positive. Oil goes up, equities go up. Over periods of time, of course, you can find periods where the relationship breaks down. But the reason, of course, also is important. Oil going up in certain phases is a risk-on indicator. There is too much demand and growth is doing well, which is not the case necessarily right now. This is more geopolitical-led. So, that correlation doesn't really sit well right now, isn't it?
Well, that's exactly right. I mean, Prashant, it's a war premium that's built into price, and that's, in times of conflict, this really demonstrates the fragility of the market, and not only that, how much you can see these spikes. And this is why it's very hard to, I think, identify how much further it can go. yes, $100 is achievable, could be well in excess of that if there's more conflict. And this is a long, protracted battle, and there are other countries involved. So these are the uncertainties that impact the oil markets, and traders are mindful of it. And that just demonstrated on Friday, up 6% is just huge.
Well, Peter, those images coming out of Israel, they're really heartbreaking. Children, ladies, it hurts you, right, to see that on a day-to-day basis. But, we need to look at the markets and the way things move. And commodity markets in particular are likely to see a lot of more interest, particularly gold. Gold spiked up 3.5%. From an equity market perspective, well, that doesn't spell very, very good times. But when you joined us the last time around, you said you rather prefer silver. What are the levels you look at both those two?
Well, yes, I am, very much so, Nigel. I mean, both have had a nice rally, and certainly gold really kicked along. It was just monstrous move over the last week. We're up the best part of about $130. So, it's been strongly bid up, and I think that momentum probably has got more legs in it, and maybe you're going to see, 2,000 taken out again. But it just demonstrates, as I say, the mood of the market sentiment, and this is where you're looking at from a risk perspective and a flight to safety. So gold will certainly take up silver, and or vice versa, and they'll both have I think a nice rally to the upside. Unfortunately, these are the situations that drive these movements.
All right, we'll let you go on that note. Thanks a lot, Peter, for joining in. Appreciate your thoughts. That's the word coming in on crude and the big move that we've seen above $90 a barrel. Prakash Diwan is still with us, so let's get talking to him. Prakash, I wanted your thoughts on how to approach Tata Motors now. It's had a dream run, right? And now unlocking more value for shareholders by selling stake in Tata Technologies. Is it too late to jump in, or do you think there's lots more to go?
So the answer is yes to both. And why the paradox? Because it might not give you, the same kind of a run that it has in the last 12, 18 months. But the next big milestone for them, and all of this stake sale and all, which is helping them reduce debt, is going to help them attain the target of being debt-free. Now, that is a very strong situation that they can find themselves in. Any kind of vulnerability in terms of market share gains or losses will probably, set that off if you're light on the balance sheet. So I think from a structural standpoint, it still has much more to go, but you might not get the same kind of gains immediately. So buy on dips. The market is still very, nascent in terms of EV vehicles, and that's where core focus is. And they could be able to raise some money at very, very significantly rich valuations. So that will come in handy also. So I think you'll probably see it consolidate a bit, but then it will continue to move. But buy on dips is a much better way, Sonia, than jump into it at, because if it corrects, it could probably be at least another 15-20% from here. So that might be a bit debilitating. So I would recommend a buy on dips and hold on till the next 2 years at least with a 2-year horizon. Definitely you'll make that.
Okay, all right, Prakash, let's actually go across to Anuj as well, who's now standing by with how he's looking at the market. Anuj, good morning.
Morning, Prashant. Well, first of all, to all our viewers, a very happy Navratri, auspicious 9 days for the markets. And I think the market's also been like that, buy on dips. Today, of course, is big day because you have HDFC Bank's numbers, and that sort of sets the tone for the bank nifty. So let's watch out for that. The market's been rewarding buy on dips traders. Even on Friday, you saw that play out. Of course, the only worry is the Brent crude prices, which are back above $90 after cooling off for the last couple of days. So that could mean good news for Nifty IT, which anyway has been refusing to give up, even after poor guidance from Infosys. So my sense is Nifty IT once again leads the bulls and perhaps even hits a new 52-week high in next 2 months. It's possible. And if you get support from HDFC Bank, even the Nifty might join in. On the Nifty, the support that I'm watching out for is 19,635, which is Friday's low. And I always mention that, the day after is the big day. So the day after the war, 19,565 was the low, October 10 low. So that's something to keep an eye on. On the upside, there are two resistances, both placed close to each other, 19,805 Friday's high and 19,843, which is the series high. On the bank nifty, of course, you want to see how HDFC Bank moves, but in terms of support, it's 44,203 Friday low and 43,796 the series low. The first resistance is Friday's high, which is placed at 44,563, and bigger resistance is 44,710, which is the series high. Now, I would want to wait for HDFC Bank's numbers and market's reaction before taking any view on the bank nifty. But for compulsive traders, perhaps you want to play the range, which is a big range, 43,800 to 44,700.
Right, Anuj, thanks a lot for that. And, let's take a short break on that note. But let's see what the market has to do from here on, because we have some commentary coming in from Mitesh Thakkar and Sudarshan Sukhani in just moments from now. So don't go anywhere. We'll be back in just a bit.
Okay, welcome back. You've got the market, which I think is indicating, the GIFT Nifty is indicating a smaller start, but maybe that is today not entirely completely accurate. Maybe we get a slightly larger dip. Let's see. We have our experts joining in now. Mitesh and Sudarshan are with us. Gentlemen, good morning. Good to have both of you here. Mitesh, start with you on the index. What's the sense? Are we going to at some point test that 19,650? That rising trend line, that level once again, or you think it'll be able to avoid it? What's the sense?
Prashant, to me, I think, good morning. To me, I think, it's a market which has kind of lost the directional upside bias and has turned sideways. I think most of my trend indicators are turning flat and volatility indicators still are rising. So the more likely outcome would be possibly a choppy market, but a range market. So I would look at levels of 19,850, 840 on the upside, which I think Anuj also mentioned and you were also highlighting. It's a very, very important technical pivot over there. And 19,650, or in the worst case scenario, 19,500. So I think broadly it looks like a 200 point kind of range for the next couple of days. It should be choppy and volatile, and therefore trading the index will be something which I would want to avoid.
All right, Sudarshan Sukhani is also with us. Sudarshan, this market has genuinely been all over the place, right? But there is a negative bias to it. How are you feeling about that? And would you also avoid the index today?
Good morning. See, this small uptrend that we saw is now over. So the stage is set for either a trading range or an actual decline in the Nifty. We'll just see if the trading ranges hold at 19,550. If they hold, then that will become a buying opportunity. And if they don't hold, then the Nifty becomes an avoid. So because I don't really recommend going short in what is largely a bull market. So the trade is, if you see a sharp dip towards 19,550, 19,600, Be brave and take a buying opportunity with an appropriate stop loss, else stay away. The bank nifty is completely bearish. You could take an intraday short trade there.
Okay. All right. Those are the call on the indices. Sudarshan, good morning. Give us your trading calls as well, individual stocks.
Yeah, Oro Pharma is a buying opportunity. The stock has been rallying. That rally has now, momentum has slowed down, which is normal. It cannot continue like that. But the uptrend is persists. So buy with a stop under 906. Canfin Homes has been making those lower highs, lower lows pattern consistently. It's an intraday short with a stop above 759. Naveen Fluorine had a big gap down, and then that downtrend continues. Again, an intraday short with a stop above 37.26. And Polycab is now in a trading range after a big rally. Such ranges usually break on the upside. Make it a positional trade. Buy with a stop under 5110.
Okay, Sudarshan, thank you very much for that. Mitesh, what about you? What's on your list?
Prashant, I have a mix of buy and sell calls. On the buying side is HUL with a stop at 25.37. I would look at a potential price target of around 26.30 in the near term. And Container Corporation could be reversing after a decline. So buy here with a very tight stop at 704. Look for a target of 735. And I have two sell calls. One of them is Biocon, which I recommend selling with a stop at 260 for a target of around 240. And LTI Mindtree, that's the final sell call from my side. LTI Mindtree, I would recommend selling with a stop at 51.45 for a target of around 5,000.
Got it. All right. Thanks, gentlemen, for that. Let's take a short break. We'll come back with the pre-opening rates. Also, Aniket Mhatre of HDFC Securities will be joining in to discuss the big move that we've seen, the big announcement from Tata Motors to sell their stake, part stake, 9.9% stake in Tata Technologies, and also what the call on the auto sector is. Stay tuned for that. Well, let's get talking about the F&O market now. Manoj Muralidharan, the Vice President Derivatives at Relicare Broking, joins us. Manoj, hi, good morning and thanks for being with us. What is the order of the day, the order of the week, and what are the stocks that you're looking at this morning?
Good morning, Sonia. Sonia, at least for this month of October, if you see, the positioning in the Nifty has not been much, that is directly proportional to the open interest that we see. And thanks to the bank Nifty, it is not really outperforming. Rather, I would say that Friday we have seen fresh short build up. A good 9.5 to 10% of short build up is visible in the banking stocks. HDFC Bank with the highest weightage in the bank Nifty has been underperforming as well. So a call writing at 19,800 strike with an underperformance in bank simply says that the market might certainly face a resistance closer to 19,800. The gift Nifty is flat, I guess 10 to 12 points positive. So a bounce closer to 19,800 becomes a good level to go and buy a put option for maybe a 200 points on the downside. So 19,600 and 19,850, this 250 odd points is where I expect at least the next couple of days it might spend it, at least for this weekly expiry. Stock specific, pharma can garner more buying. I believe stocks like Lupin at 1190 should be a good level to go long with 1160 as a stop loss and 1220 as a target. A bit ambitious, but I guess SBI, if you get a bounce closer to 584, 583, that's a good level to go short. The stop loss should be 590, and the stock might slide all the way to 568 as a positional target on that.
All right. Well, thanks a lot, Manoj, for that. Well, we're just getting into the pre-opening rates now, so we'll wait by for these rates to settle. But there are plenty of stocks that we can still discuss. A lot of the, paint companies, tire companies, aviation stocks could be under pressure today because of the kind of move that we've seen in crude. Prakash Diwan is still with us. Prakash, how do you approach these names like, say, an Asian Paints or, even some of the tire makers have actually been doing very well. Volume has picked up, demand has come back in a big way. But now this higher crude prices could perhaps put pressure. What do you do here?
I think that will probably be an opportunity to buy in because these the impact of crude is usually temporary, and I'm making a big assumption that post December, Jan, you probably see a little bit of a softening come because of the slowdown in demand or this whole winter stockpiling probably not being such a big issue. But remember one thing, that some of these companies are also, facing a lot of issues in terms of the incremental demand that they are expecting from the festive season. So more will depend on that than the crude. The crude is probably a temporary dampener. I would definitely buy on dips, particularly some of the airline businesses which are doing so well, and Indigo is, of course, the one that I'm talking about. On the paint side and some of these other derivatives, there's a huge choice that's available. Some of them which have not done well in the past could probably start doing well given the kind of mix that they have, the price points that they're catering to. So I look at something like Berger rather than Asian Paints at this point in time.
All right, Prakash, I wanted to ask you about this name, Skipper, the T&D company, and it's done well in the past, and then we saw a sharp correction on the stock. But it appears interest is back as that stock has been moving up, and over the weekend they won another order of around 500 crores. 2023 actually has been the year of order wins. The street is getting very excited about order wins without looking at execution or, the working capital requirements as well. How do you see this stock play out? It's at around 230 rupees.
So, Nigel, I think if you look at the longer history of this stock, even there you have enough volatility to dissuade you from believing that things are going to be very smooth going forward. This order book investing is getting to be a bit difficult for people to understand. It started with the railway stocks, started with the defense stocks, where the translation or conversion ratios are very different. But in infrastructure, there could be so many slips. And I can give you so many other names. There's a company called Ashoka Buildcon, has a great order book, 17,000 crores plus, market cap of just about under 4,000 crores, P multiples of just 10 plus. So, you'll find these situations, but execution and, lumpiness of earnings, the quality of earnings is much more important as well. So I would refrain from buying into these names just because of the, activity around that in terms of the order flow. You would rather wait to look at some sort of a secular trend from these companies and the earnings quality to go up to buy it.
All right, Prakash, thanks a lot for that, and thanks for joining us. We have the pre-opening rates which are kicking in right now. So a couple of the stocks that you need to keep your eyes on. HDFC Life is definitely in focus. There are a lot of brokerages that have come through on HDFC Life. CLSA has actually upgraded HDFC Life to an outperform from an underperform and raised their target price to 725 from 680 earlier. So keep an eye out on that stock. And a couple of others actually in pre-opening. Take a look at Tata Motors. That's also a big mover, up almost about 0.5% right now. So let's put the focus on that. Tata Motors will be selling a 9.9% stake to TPG Rise Climate for 1,613 crores. Aniket Mhatre joins in. He's the analyst at HDFC Securities. Aniket, Tata Motors is making all the right noises, right? They are, of course, doing well in their core business. Now they're unlocking value for shareholders. They're, cleaning up their balance sheet. But at this price, at 670 almost, is the risk reward still favorable for investors?
Hi, Sonia. Good morning. Thanks for having me on your show. So on Tata Motors, our call, we do not have a positive rating on the call. We actually have a sell just because we do not expect the current margins at JLR to sustain going forward. For the simple reason that if you look at all the peers today, luxury peers, right? Everybody is selling their best product at the best margin. Once the supply chain issues are behind and which we are seeing are gradually receding, I think your mix will also normalize and your marketing spends will also normalize, which would sort of in turn lead to margin pressure, which is why we have a cautious stance on Tata Motors at the moment. Back home in India, if you see, they are losing market share both in passenger vehicles and commercial vehicles for quite a few quarters now, which is also concerning given the stock up move right now that we have seen, which sort of again leads us to a cautious view at this moment.
Okay, that's interesting. So you're saying that you have a sell call on Tata Motors. They're losing market share in the passenger and commercial vehicle back home, and you don't expect the JLR margins to sustain. But particularly on this, this Tata Technologies stake sale, what is your view? Because I think this was expected before the Tata Technologies IPO. But given that, we are in the process of unlocking perhaps more value for shareholders by Tata Motors, do you think the market would take it well?
Right. So if you see, Tata Technologies was already coming up with an IPO, right? So even in our model, we have factored in about 40 rupees per share for Tata Technologies from the stake sale. So this value unlocking story is already there. I don't think this is an incremental positive. Yes, the last few years, Tata Motors has certainly done very well to unlock value in key subsidiaries and hence try to hive off their debt. Our key concern, as I said, is on the margin sustainability story. Clearly, if margins sustain, clearly they will do very well even from here. But that's where we tend to differ from the street at the moment. I think maybe a quarter more where mix will be favorable, and then beyond that, I think mix will start normalizing, and even a discount will start picking up. Especially given where we are in the global macro scenario, where key geographies are seeing macro headwinds. Right, in that scenario, we see some headwinds to Tata Motors. JLR piece for sure.
Okay.
So, did you see that story? I read it on Twitter. I don't know if it is even true. So maybe you take it with a pinch of salt and confirm yourself. Tesla's base model price has apparently dropped, and it now matches, sort of ICE engine pricing.
Okay.
So it's. I don't think it impacts the luxury segment, but I thought it was pretty astonishing because it was considered the premium and much more expensive, etc. But maybe it's because demand is looking a little wobbly or whatever, but maybe also because costs are coming down, right? Battery costs, etc.
But that's interesting, right? Aniket, we also have the entire auto pack starting to report their numbers, and it's going to be an interesting one, a mixed bag perhaps, because margins are set to improve, but demand continues to be hit in certain pockets, right? Like passenger vehicles, the affordable segment, etc. What would your pick of the pack be this earnings season?
Sure. So if you look at the overall volumes, right, for two-wheelers, for instance, we are expecting a 1% volume decline this quarter for the simple reason that the entry-level segment has just not picked up. Passenger vehicles continue to do very well. They are expected to deliver a 9% growth. Even commercial vehicles have done reasonably well. Tractors, on the other hand, continue to remain weak. So in terms of earnings growth, just one point on margins. Clearly, as you rightly pointed out, margin improvement is expected year on year, but where the outperformance will be is where earnings margins will improve on a sequential basis, which will happen on the back of operating leverage benefits. Now, if you see passenger vehicle category per se, the likes of Maruti, I think they are expected to outperform this quarter. They have, from a mix perspective, in UVs, Maruti's mix is the most favorable right now. They have moved to a 33% UV mix in this quarter from a 25% mix last quarter. So clearly Maruti's mix is extremely favorable, and we expect a very strong margin improvement in Maruti. Coming to some of the peers like two-wheelers, for instance, TVS has done extremely well again. TVS has delivered a 13% volume growth even on a sequential basis, which has outperformed peers which have grown anywhere in the single-digit range. So TVS tends to outperform, and hence even margin expansion at TVS is looking very strong on a sequential basis. So TVS and Maruti, I think, on a sequential basis should deliver a very good earnings performance in my view.
In fact, on TVS, right, there was this DAM Capital report on TVS, a huge price upgrade. I'm sure you took note of that. They've raised their target price to 3,050 on TVS. I mean, it was 1,875 earlier. Would you concur with that view that TVS is going to become an export engine, and that could perhaps lead to a big re-rating on the stock? And what's your own target price?
So won't comment on specific report, but suffice to say that if you look at the recent noise around TVS, right, even the management has indicated recently that they would want to get exports to about 50% of the overall mix. Now that's a clear incremental positive where we were not expecting such a strong story develop around the exports, or a fast pickup in exports for that matter, right? We were always expecting TVS to do well in exports, but not such a fast ramp up in exports. Domestic, they are already doing very well. They are gaining share, etc. But even exports, they are now talking about a 50% mix in their overall volumes, which should be favorable for their mix and also for their margins. So clearly, TVS remains one of our top picks in the auto space at this stage.
All right, Aniket, we'll leave it at that. Thanks a lot for joining in and taking us through, your views on the auto sector. By the way, just waiting for these rates, the pre-opening rates to adjust themselves. A couple of stocks, as I said, because of the big move that we've seen in crude, Paint companies have been under pressure. So Asian Paints is down almost about 0.8%. You have tire companies as well, and a couple of other companies. The aviation space could be under pressure because of the spike in crude. On the upside, ONGC is up 1.5%. You have HDFC Life that's up 1.5%. CLSA has upgraded HDFC Life, and then Tata Motors as well is up almost about 0.2%. HDFC Bank is one stock that everyone is going to be looking at ahead of their numbers. The numbers, I think, come out at 6 p.m. in the evening, so we'll keep an eye out on that. But let's get across to Sudarshan to get the 9:10 call of the day. Sudarshan, what are you looking at?
Polycab is a buying opportunity with a stop under 5110.
And Mitesh, what about you?
I'll go with a sell on Biocon with a stop at 260 for a target of 240.
Got it. That's Biocon. And Mitesh, just a quick word on HDFC AMC. I think there was a fair bit of, I think 4-5% move on charts. How's that performing?
It's actually looking very good, Prashant. We've had some buy calls here. But if you look at the historical charts, we had a monthly closing of around 29.20 in the month of August 21, and we are close to that. So that's a monthly pivot. I think you will see some profit booking happen at these levels. So not a good price to enter, but definitely a buy on declines. Once we cross 2920, I'm expecting 3100 at least.
Okay, all right. Thanks a lot for that, gentlemen. Let's revise a couple of stocks that will be in focus. So, before we do that, just pull up Dalmia Bharat. The stock is up close to around 1% in pre-open. The positioning was such that the numbers will be a disappointment, and actually it wasn't that. In terms of negatives, they were more or less in line with what the street was working with. So that's one stock as well you should keep on your radar. Mangalam joins us to tell us about Avenue Supermarts. Those numbers were softish. Mangalam?
Those numbers were softish on account of weakness that we saw in the company's product mix, and that weighed on their gross margins and the EBITDA margin subsequently as well. Brokerages have written on DMAR. Jeffries said that, the second quarter EBITDA was also below expectations on account of higher staff costs in accordance with, what the store opening of the company has been. The first half same-store sales growth, according to them, is 8.6%, which is respectable with improving footfalls. But store additions remain muted and they should ramp up. That's a monitorable for them. They have a hold rating, but they've increased the target price from 3,700 to 3,850 on account of rolling forward to the next year. ICICI Securities says that their performance remains unimpressive. In fact, general merchandise and apparel grew just 11% in the first half of this fiscal. And this relatively weak margin mix is, something that is a bit of a pain point for their gross margins. They've cut their earnings expectations for the next 2 years by about 6 to 1%. They too have a hold rating on the stock, and they too have increased their target price from 3,700 to 4,000 purely on account of rolling forward their estimates by 1 year.
All right, thanks a lot for that. Well, Surbhi is also joining in. She has HDFC Life that she's looking at this morning. Surbhi, over to you.
Thanks so much for that. So HDFC Life reported their numbers on Friday, but there's some positive brokerage notes that are coming in. CLSA has upgraded HDFC Life from outperform from underperform and raised their target price to 725 from 680 earlier. They said that there were flat VNB margins for H1 on account of higher sales of lower margin products. They saw APE growth of 9% driven by strong growth in protection and the ULIP products. The share of non-par savings have now normalized to 28% on a year-on-year basis, and the HDFC Banker channel has risen to 62% from 57% earlier. They see an APE growth of 6% and 14% for the next two fiscals, but flat VNB margins for FY24 at 27.5%. Jeffries has maintained their buy call with a target price of 800 rupees per share. They said that the APE and the VNB growth was below estimates for Q2, but the forward-looking trends are more encouraging, and the wallet share in the HDFC Bank channel has risen to 65% already, and sales from agency can improve, and other banker channels are also growing, so that is why they have a buy call for HDFC Life.
All right, thanks a lot for that. We just have a minute left for the market opening. A couple of more stocks, right? Kalpataru Power, there's a big order win, about 2,200 odd crores. So keep an eye out on that. If we can just get the stock up for you, it'll come up in a bit. Delta Corp, by the way, its subsidiary Delta Tech Gaming has gotten a huge tax payment of 6,384 crores. So there could be some, look at that, 5% lower on Delta Corp. And NBCC, Bajaj Electricals, a couple of other stocks that are in the green. Bajaj Electricals has bagged a transmission line project worth 560 crores, and NBCC has got a work order worth 80 crores from the Visakhapatnam Port Authority. So these are just some stocks that you can look at. For our own markets, the problem is higher crude prices, which could put a lid on the market gains today. And then there are lots of big cues like HDFC Bank's numbers as well to look out for. But here's the first tick on the index. It is flat with a negative bias. The Nifty is down about 25 odd points. The Bank Nifty is down about 140 points. And the pressure is really coming in from HDFC Bank, which is down 1% ahead of its numbers later today. It has been the big underperformer this year. The stock is down about 7% in a market that has been surging. Asian Paints is the other one, down about 1% on the back of higher crude prices. And BPCL as well is down about 1% odd. Following that, you have Divi's Labs, Britannia, HUL. HUL comes out with numbers this week. Ahead of that, the stock is down about 0.4%. Eicher Motors, ICICI Bank, JSW Steel that are in the red. So the Bank Nifty is the one that's dragging its feet. But on the upside, HDFC Life is up about 1%. HCL Tech is up 0.5%. In fact, a lot of tech stocks are doing well. LTI, Mindtree, Tech Mahindra, all in the green right now. Infosys, TCS, all trending in the green. Wipro comes out with numbers this week, so that one is also in focus. Adani Ports is up almost about 0.5%. So it is a lackluster start to the market today, to be honest. The Nifty is down about 30 odd points. The Bank Nifty is dragging its feet a bit, but it's not as bad as one would have imagined given the way crude prices have surged. So just hanging on around that 19,700.
Well, that's right, Sonia. Crude oil prices have spiked up. You have ONGC and Oil India. They are both the big gainers on large volumes as well. Both of them up more than 2%. Dalmia and Bharat, as we said earlier, the numbers were more or less in line to mildly better than what the street was working with. Management commentary is something that we'll be tracking from here on. So that opens up with a 0.5% gain. You have PVR Inox. Well, they're talking about screening the India Cricket World Cup matches. They've also launched that monthly plan of around 699 rupees. Stock is more or less flattish to kickstart trade. The order wins, Bajaj Electric, they have won an order worth around 560 crores from Power Grid. So that's up more than 5%, I think, in early trade. You have Skipper as well. That's up and about in today's trading session because it won an order more than 500 crores. Prakash said that you should be a little bit cautious going by past performance. But for the time being, the street is celebrating this order win. That's at the high point of the day, up close to around 7.5%. NBCC, they won an order for around 80 crores from Visakhapatnam Port Authority. So that is well doing quite well. Suntech Realty, a couple of brokerages were quite positive last week. And now they've come out with their pre-sales update, which looks quite good. Texmaco Rail, we'll have the management in just a bit from now, but the EBITDA number came in high by 6%, but they've also announced a demerger of one of their verticals, and that's why that stock is up close to around 8%. On the flip side, Delta Corp under some pressure because of that tax notice they've got of around 6,600 crores, and Godrej Properties as well, their arm got a GST tax demand of around 97 crores odd. So those are all the stocks, I think, that are on focus today.
Well, Sun TV is down about, 2.5%. Stocks at about 619 as we speak. I mean, with the market's not doing very much at all. It's down just about 25 odd points. So it's not a big one in that sense at all. So much better as compared to what many Asian markets are doing. We've got cuts of between 0.25% to 1.5% even. But that's not the case here. So some of these kind of typical things which play out, right? Oil spikes and, things like Asian Paints and Indigo and these kind of things, they are, but very, very small, 0.5%, 1.5%, and so on and so forth. Nestle is down about 1.5%. There is, what else? Delta, I think we mentioned. DMart, DMart is down about 3.5%. Indocent is down about 1% or so, but nothing else. I mean, market breadth, by the way, overall is about 2:1 positive. So this is not bad at all. MMTC is up 6.5%, and that's the largest volume traded gainer right now on the upside, the big one. Huge volumes. There is, I think we mentioned NBCC, Texmaco Rail, of course, 7% there. Again, large volumes. Sequent Scientific is up about 4.5%. Bajaj Electricals is up about 5.5%. We mentioned that. Walchand Nagar Industries, 5%. Defense names, 168, 169 on Walchand Nagar. Gokuldas Exports, I mean, that's a big move on Gokuldas Exports. 927, 930 or so on Gokuldas coming up right now. So, after that acquisition, the stock did spike up to about 900 and then it came down about 100 rupees or so. But I think it's basically back at those levels once again. PC Jewelers is coming up with about a 6.5% gain. Anantraj is up about 3%. But volumes, you go down the list, they're not exactly all that strong. 45 points lower now on the Nifty. 19,700 is where we are at. The Nifty Bank is starting about 0.5% lower at about 44,100 as well. Banks, of course, the Banks index has been the weaker of the two in terms of the Nifty and the Bank Nifty. Bank Nifty has been the weaker one. Well, we have Ravi Dharamshi now joining in of Value Quest. He's our market master today. Ravi, good to have you with us here. Thank you very much for your time. Prashant this side. You've been focused, Ravi, on the energy transition theme in a very large way, right? New energy and industries which kind of support that particular transition. Stocks have done exceedingly well, so I want to use this opportunity to kind of ask you to take stock. The journey is a long one, but prices, of course, try and factor a lot of that in. So where are we on things that you like? Praj, for example, something we've discussed in the past. Go on.
Morning, Prashant, and thank you for having me, and good morning to all your viewers. I think last 6 months have been fantastic for capital goods related theme in general. And within capital goods, I think a lot of capex is happening towards renewables. I think, as discussed in the past, renewables is one theme that is going to last a long period of time. Of course, it will have its ebb and flow in terms of policy, in terms of demand supply. So that is going to, make the stocks go up and down. But at the same time, the theme is a much bigger, much longer one. And there are various aspects to this particular theme, whether it is, solar, wind, hydrogen, electrolyzers, EVs, biofuels, all are aspects of the same theme. If we have to save this planet, and there is no planet B, so we have to focus on getting the energy transition right. And that does not mean we can be stuck up in a ideological debate. It is an all hands on deck approach. Whatever technology is available, whichever economics are favorable, we move towards that. So biofuels, even though it might not make a large sense from the overall world perspective, but for an agrarian economy like ours, it makes a lot of sense. It helps in stabilizing demand supply. It helps in generating demand for the farmer. And most of all, it helps in reducing the forex outflow because of the imports. Our dependence on the energy imports is very high. So biofuel will play a critical role in reducing that dependence on imports. Coming from the point of view of stock market, there are not too many plays available in the market. Sooner or later, these companies will come. A lot of companies will start addressing this opportunity and they will come to the market. So one has to keep the eyes and ears open. But barring a correction or something, I'm not bearish at all on the space. It's just a matter of time correction or consolidation, and the stocks will look good again.
Okay, so the energy transition theme is one theme that you're looking at. Fair enough. Ravi, hi, this is Sonia here. Thanks for being with us. Good to see you after a while. What else? Where else, do you have your sights set with, say, 12 to 18-month time horizon?
So, thank you, Sonia. How are you? I have a long time since we met. But let me tell you, this is a rising business cycle. It's been this way since the bottom in the COVID. The profitability of the cycle is improving. If you remember 5-6 years back, there was a time where only very few companies were doing well. So that was a phase where, the profit as a percentage of GDP was not growing. And within that, it was getting consolidated within few companies. Now we are in a phase where the profit as a pie is growing, as well as the number of people contributing to the pie is growing. So there has been a change in the kind of upturn we are seeing. Earlier, everyone was balance sheet focused. I'm not saying that one should not be balance sheet focused now, but the focus has shifted now towards P&L, which are the companies that can grow fast. And when there is a rising tide, there are many companies that do well. From time to time, there will be sectors that will be in focus. But as a theme, as a business cycle, the stage of the business cycle that we are in, I don't think we should be, classifying everything in small and mid cap and saying small and mid cap is seeing too much of euphoria and one should not be investing in the market. I think there is enough and more juice left in a lot of stock ideas that will keep coming up. So we should be focused on that. Some of the themes that we continue liking are financials. Within financials, we like lending as well as non-lending financials, affordable housing lending. Then we like general insurance, we like life insurance, we like capital markets focus theme as well, whether it's brokers or AMCs. We like large private banks. So there are many themes within financials that are available from a next 3 to 5 years perspective. Some of the consumer discretionary themes, companies are struggling at this point of time, but we believe the opportunity lies over there as well from a 3 to 5 years point of view, as the pent-up demand post-COVID is kind of tapering out, and the K-shaped recovery that panned out for the bottom of the pyramid, there has not been an uptick till now. I think there is a lot of pent-up over there, and as we get into the election year, as kind of money flows into the bottom of the pyramid, I think we should have a good rally in those companies as well.
All right. Hi, Ravi. Good morning. Getting into an election year, that's a big one, right? And that's a bit of a risk given the kind of state elections we have as well. But, what's your view on the index itself? There are enough and more reasons that maybe the headline index could have corrected even 5%, but that's not happening. What's your view in terms of the headline index?
Hi, Nigel. Morning. You're absolutely right. Actually, in fact, if you had told me a month back, there's going to be a war, there's going to be a conflict in Israel, Palestine crude is going to spike by about $20 from $70 to $90. We are probably going to witness the interest rates going even higher in US. So all those kind of things would have led to market correcting. Okay, that market has corrected, but the correction actually has been more on the index frontline side than on the mid and small cap side. The consensus was also that there is a euphoria in mid and small cap and one should be worried on that front. But it is actually the larger caps that are actually struggling at this point of time. Twofold reason for that. One is that it's the FIIs that are selling. And second is that it's actually those companies that are, kind of not seeing tailwinds. The small and mid caps or the companies that are facing domestic economy are having a tailwind in terms of business, as well as a lot of money is flowing into these funds that have the institutional imperative to invest in mid and small cap. So a double whammy of sort is happening over there. Good fundamentals and re-rating also happening. So now coming to the overall view on the index, I feel we are not in a situation where a major steep fall is kind of warranted or something like that. There is some amount of outflow that is happening. Clearly, we have to keep our eyes focused on crude, US yields, on dollar index, and all those things are niggling worries on the margin, but they have not yet reached us levels where you can say now there is a full-blown crisis happening and we should take all money off the table. And valuations are also not so demanding that one should be looking to exit out of index funds. In fact, there is a good possibility that over a 2-3 year horizon, larger cap indices might actually do well as compared to mid and small cap.
Ravi, let's just focus on some of these names that you mentioned, right? You said like affordable housing, general insurance, life insurance, capital market plays. You want to talk about names, Ravi? What you like? I mean, affordable housing is one area where there are lots of these fairly recently listed companies, right? Home First, Naptis, and which have not done very well since listing. I mean, there was this overhang of PE exits, etc. All of that has kind of played out for many of them. General insurance and life insurance, on the general side, not too many in terms of plays. So if you want to talk about that. And of course, capital markets, is it a mixture? Are you looking at the tech aspect of it? Names like Angel, etc. Go on.
No, I won't name any particular company, but what I can talk about is some of the themes that we are bullish on. So we really believe affordable housing lending is one space left where companies can actually make, upwards of 3% ROA on a sustained basis. In fact, right now, some of these companies are doing more than 4.5% kind of an ROA. The spreads are quite high over here because this is still an underserved segment as compared to other segments. The banks have not yet entered. It is a very high-touch business model. So usually the areas where banks have not entered is what is left to the NBFCs, where they can actually make good amount of money. So the concern over here still remains, well, how big can this segment become? Can individual players grow to become 20, 25, 50,000 crore kind of a loan book or no? And I think jury still remains out, but we have a strong belief that the segment will expand. And this is one space that is growing at a 25 to 30% kind of a rate. So, all the companies in this space are quality companies. Barring the some of the issues related to margins or some issues related to management changes, I think this, and yes, the technical overhang of PEVCs exiting, this space is doing very, very well. These companies will find, go from being a monoline lending business to expanding their portfolio. They are building a channel which will help them in increasing penetration in other lines of businesses as well. So the risk of being focused on one particular segment should get diversified over a 3 to 5 year horizon. So we continue liking space. Second, I think general insurance is one space which has kind of faced a lot of headwinds over the last few years. Of course, there has been intense competition in the motor OD space. There has also been, the yields have kind of completely fallen off the cliff on the crop protection side. Some of it might be coming back. Then we have, we have had regulatory over push in this space as well. So all these reasons have led to these stocks not doing well over the last 3 to 4 year horizon. And the multiples have corrected to reflect that. I think now going forward, I think some of those competitive intensity seems to be abating. The regulation seems to be in place. The yield seems to have stopped falling. So I think this is a great time to be looking at this space, because the runway still remains long ahead of you. The penetration level in the insurance products still remains very low. So that remains on the insurance. The third is the capital markets. We have been more... in AMC space, you have to pick and choose which AMC will do well. No doubt, AMCs can also do well, but we are more focused either on the market infrastructure or the AMC companies, on the wealth management companies, where I don't have to pick and choose which product will do well. I can focus on a wealth manager who's also actually trying to increase the yields by coming up with alternative products.
Sure. Ravi, thanks a lot actually for joining in. We will take this discussion forward at another day, a little more detailed, and just to understand what your sort of 12 to 18 month view is on the market. But for now, thanks a lot for being with us. One of the big stocks in focus this morning is Texmaco Rail and Engineering. It is up almost 7%, not just because of strong results that the company has announced, but they have also announced a demerger of their rail and green energy infra business. So let's find out more about that. You have Hemant Bhuvania, who's the CFO of the company, who joins in now. Mr. Bhuvania, thanks a lot for joining in. First, if you can tell us a little bit about the demerged entity. What will the financials of this demerged entity look like in FY24 and FY25? And are there any other verticals that you are looking to demerge in the near future?
Yeah, good morning, all of you. And many thanks for the invite. It's always a pleasure to be on your channel.
Thank you.
Yeah, the board has earlier taken a call that this division, Kalindi Rail and Bright Power, would be demerged by the way of slump sale into two of our wholly owned subsidiaries. But later, of late, in the last board meeting, the board again revised its decision and took that it would be demerged by the way of NCLT process. And the Kalindi division and our hydromechanical and bridge division would be moving off from Texmaco Rail to a separate listed company by the way of mirroring. So we plan that this would be, the entire exercise would be completed by next year. I think by Q2 next year, we expect. So for the year ended March 24, the result would be a console basis. There would be no separation for Kalindi, hydromechanical and bridge. But yes, for the financial year 24, this division would be moving off from Texmaco Rail, the mother company.
Okay, so just to understand, by Q2 of FY25 is when you plan to complete this demerger process, and in FY25 you'll start to see the demerged entity showcase separate numbers. Just to understand, if you look at the Q2 revenues of this particular entity, you had revenues of anywhere in the range of 120, 130 crores. On an average, what kind of growth are you looking at post the demerger going through?
This division mainly caters to our EPC segments, that is for track laying, signaling, telecommunication, a bit of hydromechanical, and the railway bridges that we cater to. On an average, you see that the turnover has been in the range of around 550 to 600 crore if you see the past trend. So we expect that it would be ranging in the same level as of now. We expect certain export orders from this division that we will be doing through. And as and when we get the orders, we have actually bet for a few of the export orders. So as and when we get the order, you will see a slightly improved top line in this division too, but not major.
Okay, all right. Hi, Himanshi. Good morning. Thanks so much for joining in. A couple of questions. Since you've demerged this entity, what is the rationale? Will you be looking to get a strategic investor in? Is something like that on the cards? And also, do you intend on demerging any other segments of your business?
Good morning. Just a slight correction. This division had not been demerged. The board has approved for its demerger. We will be going ahead for the NCLT process, and we expect that mid of next year, that the entire process should be through. Yes, as of now, we would be going with a straight demerger. We are not looking for any strategic investors as of now. But yes, we are open for that. In case we get something, we are happy to look into that also.
And will you look at, I know it's not demerged as of now, but as you said, Q2 FY25 is when the demerger takes place. So maybe at that point of time, you could probably look at a strategic investor if it's needed, as you're telling us. What about the other entities, the other business verticals? Will you keep it together, or will you further look to list more number of companies?
So other divisions mainly caters to our heavy engineering division, which caters to Fedcar, the steel foundry, which caters to components for Fedcar. And we will be also having the bright power division that caters to overhead electrification and transformer process for the railways. So that business will be carried out in the mother company, Texmaco Rail.
Okay, all right. Hemant, hi, good morning. Prashant here. Let's just talk about the business as it stands right now. Could you talk to us a little bit about what's the sort of updated order book across segments? What's the visibility looking like?
So if you see on a consolidated basis, we have an order book of around 7,800 crores as of date, of which heavy engineering and steel foundry comprise of around 5,600. Our rail EPC, that is Kalindi and Bright Power, as of today is around 1,700. Joint venture and various subsidiaries around 500. So if you see on a historic view, we have been doing wagons. Last year for the entire 12 months, we did a wagon of around 3,000 wagons. Whereas if you see my H1 results, we are 3,000 plus in the 6 months. So there is a substantial improvement or growth you see in the top line as well as my bottom line. So similarly, this, if you see my steel found.
So will the pace pick up? So that's about what 500 wagons, right? Every month.
Right now we are at the run rate of around 600 or just over 600. Our target is to go up to 750 or 800 by end of this year, and by mid of next year we should hit the number of 1K wagon per month. That's our objective.
Okay, I just had
steel foundry. I'll just take 2 minutes on the steel foundry. Sure. Steel foundry, again, you see we were doing production of the tune of 8,500 tons per quarter, which has again ramped up to 10,500 plus metric ton in steel foundry. So foundry also, you see we have done a substantial growth, and you'll see a better results for foundry division as well.
So sorry, 1,000 wagons per month by the middle of next year, you said.
Yeah.
That's capacity. Right. So I just want to clarify. The last time we joined as well, you were telling us about this endeavor to move from 600 to around 1,000. That is capacity, or that is execution that you're talking about? Capacity, I think, was likely to move up. When does execution move up to those run rates? So what is the execution now, and when does it move to higher levels?
So right now we are executing at around 600 plus wagons on a monthly basis. Our target is that on a monthly basis by March 2023-24, we reach to around 750 to 800 wagons. And by mid of next year, we should be executing 1,000 wagons per month.
Oh, executing 1,000 wagons per month by mid of next year, right?
Yeah.
Okay. I just wanted to go back to the rail and energy business demerger. You said that you expect this turnover of 550 to 600 crores to continue, but you do have certain export orders as well. What is the quantum of those export orders that will come through? and, over and above this 550 to 600 crores?
So we have bid for the export orders. So we have not received as of now. So
How
as and
much
when
is
we
that?
receive, so that is around 100 crores of as of now. So yes, we have bid for that. We are order has still not been decided. So we expect that yes, we should be coming out successfully in that order.
Okay, and sorry, the rail EPC arm, when do you expect it to turn profitable?
So on a EBIT basis, if you take out the depreciation and the finance cost, so we are into profit. But yes, if you see at the PBT level, this division is making loss. So once the restructuring and everything is done, I think we will be also reducing some high cost debts from here. So I think from mid of next year or from Q1 next year, you should see improved results for the infra and my green division too.
All right, Mr. Hemant, final question before we let you go. You also talked about a QIP. What's happening on that front and when does it come through?
Yeah, so the board has in principally approved last time to raise funds up to 1,000 crores by the way of QIP and 50 crores by the way of preferential. So we had applied to the shareholders and we expect the approval from the shareholders by 4th week of October. We will be going ahead for the preferential issue first. So we plan to close the preferential within October, I think first week of November. We have a 15 days time and thereafter we open the QIP. And once we have a shareholders approval, I think we'll again have I'll lead up to board to decide and to take a call on this.
And the quantum could be?
Sorry, I missed you.
Quantum? What could the quantum be?
So the quantum, we have got an approval of 1,000 that would be raised in one or more tranches. So once we have the approval for the shareholders, I think the quantum would be decided by the board. So
okay. All right.
Sorry, just one more question. You had said that earlier for the full business, right? I don't know if I missed this, but a 30 to 35% growth in revenues for FY24 was what you were guiding for. Do you stick to that target?
I think that we would be doing better than that as of today. If you see my results, so if you see my H1 results last year and the results which we have disclosed for H1 this year, I think we are almost double. We have increased by 100% almost. So you'll definitely see a better results from here on.
What would better mean? Could you quantify it? Will it be 40, 45% or more than that? And also, what could be the rough margin given that input costs have cooled off?
If you see my Q2 results, the EBITDA has been somewhere around close to 10.5%. I think that is as per the industrial norms. Definitely, we will like to improve on that. But yes, 10.5, I think it's as per industry norm, and we'll definitely try to improve that on the numbers too.
And revenue growth, 45%?
Come again?
Revenue growth, you said you'll do outbeat what you said earlier, the mid-30s growth, and half-year mark you've done very well. Give us a number. What kind of growth should you end up this year with?
So on the growth part, you see that as I told that 3,000 wagons that we did in the entire year. In last year, we did 3,000 wagons in H1. So if you extrapolate that, yes, we would be doing better than what we did in H1 in H2. So if you extrapolate, we'll get the numbers. But as a forward-looking statement, I won't be able to comment much on the numbers over here.
Okay. All right. For the time being, though, the street likes, what you have done so far, and they like the demerger as well. Good on that. The stock is up close to around 8%. Thanks so much, Mr. Hemant, for joining in and filling us in with all of those details. Let's move on then. Let's focus on PNGRB. They have opened the 12th city gas bid round, under which it will offer retailing licenses of around 8 geographic areas for CNG as well as PNG. Mr. Gajinder Singh, the member of Petroleum and Natural Gas Regulatory, joins us on the show. Hi, Mr. Singh. Good morning. Thanks so much for joining in. Well, give us some details. Have you already started to receive bids? And is it from the usual players, BTRAC, MGL, IGL, Gujarat Gas? Or are there other regional players that have bid as well?
Yeah, very good morning to you and your viewers. We started we have launched the 12th CGD bidding round on 13th October. And now it is an open bidding. And this in 12th bidding round, we have offered us 7 geographical areas, 5 complete states of Northeast and 2 union territory, Jammu and Kashmir and Ladakh. So we are covering all these 7 GA. They are going to cover the 92 districts. if you are aware of that, already 300 GA we have authorized in previous rounds up to 11A round. So 300 GA are already there, which has already been authorized, covering 640 plus districts. And this 7 GA is going to cover 92 districts. So this round we have already opened up, and now it is going to be. Now we expect that the kind of response we received in our previous rounds, we have never found that in any GA there is a single bid. So the similar way, we are looking for a better competition and better participation in these rounds also. And this 12th round is basically the northeast states, particularly the Arunachal Pradesh, Meghalaya, Manipur, Nagaland, Sikkim. Mizoram right now, because the election has been announced, so we have kept in hold, but we are taking approval from Election Commission if it gets through, so that will also get included. So as of now, there is a 7GA, but if Mizoram gets added, so it will be a 8GA.
Got it. Mr. Singh, good morning, and thank you very much for coming on the program, sir. Because since some of this terrain is difficult to kind of lay the infrastructure out, will there be any concession, subsidy, etc., provided by the government?
Oh yeah, we have seen like if you see in North State states, now the gas pipeline is already being laid. With the Indradhanush gas pipeline, it is getting connected through the gas network, and all this pipeline is touching the state capital of all those northeast states. And now we are seeing that this pipeline is due to commission in the next year. So by the time we award the GA, because initially it will take time to complete the closing of financial closure and other things, by the time pipeline will also be ready. What we have given, one is the source will be available to the each state's capital. Second thing is that earlier we used to do, if you see the previous rounds in 300 GA, which is covering 640 plus districts. But this GA, 7GA is covering 92 districts. So we have made GA-wise, we have not kept any restrictions. It is now up to the entity. Wherever they want to go, they want to spread. Wherever they see the business opportunities in that particular GA, they will spread in those things. So we have earlier, the inch kilometer used to be the criteria. And particularly in difficult area, this used to be a very stringent. So that we have now is not there. So wherever they feel, wherever way they want to take the gas in those areas, it will be totally dependent on the entities.
So in terms of you said 300 geographical areas have already been authorized, right? I just want to understand what is the expansion plan. Currently, there are, I think, around 5,900 CNG stations in the country. Over the next, say, 1 to 2 years, what will the expansion plan look like?
Yeah, if you see in the previous round, what you mentioned, this 300 GA, 276 GA already start drawing gas. And there the commitment, what they made up to 11th AGA, that they are going to have that CNG station, which is right now, what you said is 5,900. Now it is going to be 10,000 plus. They have already committed. The entities have committed in their areas. And the target of CNG, they are meeting what we have seen. There's a progress is very good in those, particularly in CNG area. As far as the PNG,
I think we lost the line with Mr. Singh. We'll try and just re-establish that and go back to him in just a bit. So just waiting. Well, the market is down about 35 points or so. We're about now 19,715. So, you know, there was a bit of a dip which came through, but there are pullbacks which are appearing as well. And as we were saying, compared to what's happening in most of the rest of Asia, here things are looking much better. While we're waiting, just a couple of more names on the stock side. D-Mart is down 3%, if you can pull that up. There is HBL Power, which is coming up with a 3.5% cut. Very large volumes on these names. And I think you've got Phoenix Limited, which is down about 2.5%. Utkarsh Small Finance Bank is down 3%. So newer names, they were not there in the morning. And there is United Breweries, which is down about 2.5% as well. So this is what is happening as far as the stocks on the downside. Market breadth, by the way, is still very positive. You got about 1,300 stocks higher and about 800 stocks which are lower right now. I think Mr. Singh is back with us. Mr. Singh, apologies, we lost you there. Please continue, sir.
Yeah. So what we are saying that in a previous round, the MWP target, the minimum work program target, which were the bidding parameters, parties are now making an investment in those areas. And if you see that in each area, the distribution networks, which is required for PNG, CNG, are being laid by these entities. Not only for PNG, CNG, if you see that all the demand center, whether it is an industrial customer and the commercial customers, those are being connected. Currently, if you see that 37,000 industrial and commercial customers are already connected. 37,000 the commercial customer means the big hotels and the big places where they require the gas for cooking, and the other industrial areas wherever they are there in those particular areas are getting connected. So that way it is a good way. I mean, the progress is good, but for PNG side, the progress is slightly low, which is not quite appreciable. But we are now seeing that regularly monitoring those things, how it can be expedited.
All right, Mr. Singh, recently you all had finalized the unified tariff pipeline, and that was the big update that the pipeline players were waiting for. Any policy decision that can be expected either in this year or the next for the sector?
As you see that it was a long pending unified tariff, which we did it, and now it is running very nicely. We have not, initial teething problems were there, but now it is running very smoothly. But initial first year we have kept is that we will evaluate that how it is going to be, what all changes required to be made. If something is required to be made, then we will take at that stage. Particularly as of now, we are not seeing any problem. But we have given a 1 year time as an initial period, and then we will see that if any changes will require, we will definitely work out on it.
Mr. Singh, just last couple of questions from my side. Could you tell us what is the population coverage, sir, of PNG now? I mean, do you have a number? Before this 12th round, I mean, what's the coverage?
You see that up to that 12th round, up to the 11th round, 11 round, the total coverage for men, the population was 98%, and the geography-wise, the area-wise, it was 88. But with this 12th round, it is almost 100%. Now we left with only the Port Blair, Lakshadweep, and there are the few areas where we are working how the source can be made available there. If the gas source will be made available to them, that is only the left out area. All in terms of otherwise, full country is not covered.
Got it. In terms of volumes, though, although 98% is covered, full country now, of course. In terms of volumes, is it largely still skewed towards, offtake? Delhi, Bombay, the big cities?
Yeah. If you see that, particularly for CGD, as I did mention, it is a gestation period is slightly bigger. If you see particularly IGL and MGL, they are drawing now, like IGL altogether, they are drawing 9 million gas. And similar way, the MGL, they are drawing almost 6+ million gas. So these are now becoming they are becoming the anchor customer. These gas is going here in those PNG, CNG, and this segment. Similar way, the other cities have the potential to grow up to that area. Currently, if you see that, the total gas is going to 35 million.
Right. Got it, sir. So just one last question, sir. You mentioned that CNG stations which are going to go up to 10,000. Is there any pushback from players? Because we are also seeing on the transport fuel side moving from ICE engines to electric vehicles, right? There's a big transition. But then there is the CNG side of things which is also playing out. So if we were to leapfrog from ICE to EVs, where does the CNG that fuel composition really fit? Is there what's the regulators thinking on that, and are you seeing any pushback from players? Go on, sir.
We are well aware of all those developments, what are taking place. But what we see that there are the alternate fuel currently like petrol and diesel. If you compare that, then definitely the gas is cheaper than all those alternative fuels. Once the transition for electric vehicles will come, then that situation will come. What are the things going to be? But if we see the other countries also, if we see that particularly CNG, it is going to stay. That's what we believe. And because once the infrastructure is going to be all across the state, all across the state, now it is catching up. Every year, if you see the sale of CNG vehicle, it is now crossing 7 lakh vehicles per annum. And going forward, now the total deployment of the CNG vehicles is around 45 lakh. So it is going to 7 lakh per annum if we see that if keep on increasing. So there's a good potential that CNG is there. CNG vehicles are going to stay. Electric vehicles, when it will reach to that maturity level, then definitely that become maybe after 1 decade. That's what we feel.
And we need other sources as well. So it's not just going to be one thing. Thank you, Mr. Singh, for joining us. And great speaking with you. Appreciate you joining in with that perspective, facts, figures, a lot of stuff there. Thank you. We'll take a very quick commercial break here. We'll come back. Our special segment, Quarter Se Quarter Tak, we'll focus on the consumer durables space when we come back. We'll tell you what to expect. And Renu Baid of IIFL Institutional Equities will join in with her key expectations from the space. Stay with us. Okay, welcome back. Now, we've got as promised, Quarter Se Quarter Tak segment lined up. And today, we are looking at expectations from the consumer durables space. Surabhi is standing by with what to expect from the space. Surabhi, over to you.
In the consumer durable space, different growth outcomes are expected across different subsectors. Let's start with cables and wires. In that space, volume growth continues to be healthy. Industry is working with a double-digit volume growth due to higher capex spends and upcycle in the real estate space. Added to this, the copper prices are up 10 to 12% on a year-on-year basis, which will help realizations as well. Within this space, Polycab and Havells are likely to be an outperformer with expected revenue growth of 20% and 16% respectively. And some of the other players like Finolex Cables and KEI will see low to mid-teen revenue growth. That will translate into a strong PAT growth as well, over 50% for Havells and 43% for Polycab. We'll also be watching out for the new listing RR Kabel as they will be reporting their first earnings after listing. Now, talking about the durable and the white goods space. Q2 is a seasonally weak quarter for the room AC companies, but even then there is an expectation of high single-digit volume growth. But intense competition and some price cuts were expected during the quarter, which will put additional pressure on the margins. Fans is expected to see a double-digit growth on a low base. Expect room AC companies to report a double-digit revenue growth, but the margin expansion will be capped due to the pricing pressures. Players like Blue Star and Voltas will see a revenue growth of 18 and 23%, but the margin expansion will be in the range of 20 to 50 basis points. Lastly, electronic manufacturing services space, which has rallied the most in Q2. B2B players like Sirma and Keynes are expected to lead the growth, upwards of 35%. B2C players like Dixon and Amber will see a ramp up in volumes due to the offtake in the PLI scheme, which will facilitate their growth. They will grow in the range of 20 to 25%. Profitability is also expected to move in similar trend. Keynes and Sirma to have higher profitability than the traditional EMS players. Finally, let's leave you with valuations. The space overall is steeply valued. EMS and cables and wires space more so than the others. EMS players are valued anywhere between 40 to 48 times FY25 PE, with Keynes being the most expensive one. Havells is at 50 times FY25 PE, and Blue Star and Voltas are in similar range of 35 times FY25 PE.
Right.
That seems to be the biggest concern, right? The kind of valuation that these stocks are trading at. Renu Baid joins in. She's the Vice President Research at IIFL Institutional Equities. Renu, stocks like Dixon, stocks like Keynes are trading at 45 times, 48 times. is there scope, is there enough in the business growth for valuations to be supportive at higher levels?
Yeah, hi, good morning. These stocks are trading at expensive valuations because they are expected to deliver much higher growth. If you look on in terms of the EPS CAGR, for Dixon, we're expecting almost 50% EPS CAGR. For Keynes, it's 65% CAGR. For Sirma, it's almost 45% for the next 2.5 to 3 years. So the kind of valuations re-rating is because multiple factors. There is a structural tailwind in the EMS space, very strong, large domestic market, supportive government initiatives and policies, which is driving disproportionate growth. And at the same time, the kind of growth that we are seeing is more structural and long drawn. So if these companies can deliver a 40-45% CAGR for the next 3 to 4 years, then the valuations in hindsight are actually not very expensive.
Sticking with that particular space, are there any other large categories where they, for example, laptops was the last one, although some are concerned that maybe, it's not going to be as lucrative because some of the earlier sort of proposed way to kind of give out licenses, etc., has been diluted. I don't know what your views are there, but since electronic imports are the second largest sort of item for the country, which are the other big opportunities to your mind?
See, within the EMS space, if we see, the biggest segment has been mobile phones. And at least in that segment, it is very clear over the last 2 years, the PLI scheme has been a great success. And within mobile phones, Dixon now has clearly cemented its market leadership. After taking on board Motorola, now they have Transient Group with Itel brand, they have Xiaomi, and a few other mid and small size names, which makes them the largest EMS player in the country. Apart from these segments, if you look at telecom and IT, PLI, which has been there. So telecom has been going in line with the broad numbers. IT PLI 2.0, while government has deferred the import duty restrictions and the the restrictions on import. But when you're trying to build a supply chain base in the country from almost negligible levels, I think whatever little comes to the bucket for these companies, it would be great. And if you see in IT PLI, more than 50 companies have applied, of which we expect definitely 10 to 15 will be able to have a reasonably large share. So it is large in terms of ticket size, and even if value addition in the initial years is less, for Indian domestic companies, it would be meaningful in terms of size. So for example, for Dixon, the IT portfolio was negligible or zero, literally 0 year back. But in the next 3 years, as the IT PLI 2.0 scales up, we expect this segment to become almost 8 to 10% of the revenue stream. Similar would be the case with the names like Sirma and others. So I think on the B2C, these portfolios are playing. But within the EMS space, one also has to reckon that increasing share of electronics across various end markets, be it industrials because of Industry 4.0 and automation, or EVization on the automotive side. So the other segments of the market are also witnessing very strong growth, and which is where we have companies like Keynes, Sirma, Avalon coming in, a domestic market and also China Plus One playing out in addition to this.
Right. This cables and wire space, I just wanted to come back to this because Polycab is a stock that has been hitting new highs, right? And that stock has had a remarkable run. I mean, now it's up over 100% this year. There is double-digit volume growth expected, but for someone who's missed the rally entirely, is there still more to go on the upside?
For someone who's entirely missed it, obviously, he's paying a significant premium. So maybe to that extent, the absolute upside from a near term could be limited. But there are reasons why Polycab has outperformed, because they had invested ahead in time for capacities and the kind of distribution and reach that they have. In today's environment where demand has significantly outstripped supply, they are probably among the only vendor in the country who's able to meet the supply commitments without delays. So while others are catching up, that gives an edge to Polycab, and the kind of business model that they've built up, they are generating free cash of almost 8 to 10 billion rupees annually. So yes, valuations are steep. So for somebody who's looking at near-term performance, at this point in entry will give limited or probably upside could be capped. But if you're looking at an 18-month view, then the kind of base sentiments that we have on the investment side, on the core industrial capex, infra capex, as well as rebound in the real estate cycle, we think these companies can still deliver 15 to 18% returns incrementally from here.
For white goods, Renu, very briefly, will things continue to look downbeat or improvement?
On the white goods side, if we see for the RAC market, after a very disappointing season last quarter, because of a very patchy summer and monsoon season, a good share of the inventory destocking has already started to happen. So yes, by the festive season, as we come in the third quarter, one can expect pickup in the sales coming back for brands. So the environment is definitely improved over the last 4 to 5 months for brands. What remains concerning is the hyper-competitive environment in the segment and limited headroom to take price hike, which has been consistently putting pressure on margins. So to that extent, I would say some of the other categories look relatively better off than the RAC market in absolute terms. Maybe the FMEG or the appliances market will start to look up better. White goods will still take some time. And even other categories like LED televisions, lighting have been fairly soft.
Yeah, thank you very much for joining us. Good speaking with you, and thanks for taking out the time. Appreciate it. Well, that's Renu Bedar, IIFL Institutional Equities with an eye on consumer durables and second quarter earnings. Well, Mitesh is back with us with what he's making of the market and any fresh trades. Mitesh, morning again. What do you have?
Morning, Prashant. Titan is something which is breaking out of a 2-3 days kind of consolidation, and the hourly charts look positive here. So I recommend a buy. Keep a stop below 32.90, maybe 32.88, and a target of around 3,400 can be looked at on the upside. The other stock which I like is something which has been making fresh highs. That's Power Finance Corporation, or PFC, making a fresh swing high again. Buy here with a stop at about 251. Look for a target of 266.
Okay, all right. Mitesh, thanks a lot for that. Let's slip into a quick break. On the other side, we'll shift focus on the commodity markets. Manisha Gupta will be joining in. Stay tuned. Welcome back to Bazaar Morning Call. Well, let's shift focus to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
Well, I'm looking at the crude oil prices, Sonia, because we started the day with $90, but we are trading above 91 at this point in time. So while the crude oil prices continue to be volatile, but we have seen buying opportunity or interest in the Asian markets right now. So we did see gains of 6% on Friday, and in the last week, we saw crude prices gain up by nearly 7.5%. There have been various factors which we have seen supportive for the markets. Investors, for one, are factoring in a possibility right now of wider West Asia conflict, because that's the kind of statements we've heard from various Middle East countries. We also have seen Iran warning of war expanding if Gaza blockade persists, and we will hear more about that in the day-to-day. Apart from that, US also has asked to de-escalate the Israel-Gaza conflict. Is the reason that you saw some profit-taking early in the Asian markets, but that clearly got bought into, as we can see. And then we have also seen US come out and impose first ever sanctions on tanker companies which are carrying the Russian crude oil above the G7 price cap of $60 a barrel. We do know that the Russian Urals as of now are priced at $75 a barrel, nearly $15 higher than where the G7 put a price cap there. And then OPEC also says that for the next year, they are, or rather for this quarter, they are looking at global crude stocks to be in a deficit and could see a decline by nearly 3 million barrels per day. So even as demand is not picking up as much as you would want it to, the supply concerns, the geopolitical concerns are all weighing into the markets. The positive also came in from China, where we have seen fresh cash injection come in yet again today. So that also led to some liquidity into the markets. And the US production in the meanwhile has seen record highs of 13.2 million barrels per day of production in the month of September. That is something that will keep the prices in the check going forward. But I do want to show you on how the crude prices have been in this year until now. We started with 82. The lowest for this year has been $70 a barrel, which we did see in the month of June. And then between June, July, August, September, we saw the prices run to the high of nearly $96 a barrel. There was a big amount of profit taking. We did see the prices decline all the way to 84 and 85 on 1st of October. But since then, there has been a rebound yet again, and $6 of gain in what you have seen in last one fortnight coming yet again for the crude oil prices.
Okay, thanks a lot, Manisha, for that. Let's slip into a quick break. On the other side of the break, Lata will catch up with Suresh Ganpati, the banking analyst of Macquarie Capital Securities, to discuss Q2 expectations from the big banks. Stay tuned.